Hello, homeowners and future homeowners. Thank you so much for tuning into my channel. In today's video, I'm excited because we're going to actually challenge conventional wisdom and discuss the top 3 reasons on why you might want to not pay off your house. Yes, you did hear that right. I said why you might not want to pay off your house. So, top 3 reasons. Let's get started. Okay, so wanted to get started by first talking about the benefits of paying off your mortgage. Because ultimately that is normal conventional wisdom. That's what we've all been taught is pay off your debt. Pay it off as soon as you can. That gives you so many benefits, right? It gives you peace of mind, gives you better cash flow for budgeting, allows you to be able to do other things and take other opportunities because you no longer have what is most people's largest monthly payment, and that is housing expense by paying off your mortgage. So there's a lot of peace of mind and obviously reduced monthly payments that come along with that. And that's what we've all been told. But I wanted to challenge that today by giving you 3 reasons on why that might not be the best decision for you. Now, ultimately, I am not a financial advisor. So any type of financial advice, I strongly encourage you to either A, make sure you do a lot of research and thoroughly understand your decisions, but the better decision is always talk to a financial advisor, a professional that can give you the best advice. But I wanted to share these top 3 reasons on why you shouldn't pay off your house and where I got them from. So let's check it out. Okay, so our first reason for not paying off your house is equity, right? And why is that a bad thing? Well, it's because all the money you have in equity is what we call a dead investment, right? There's no way to access that money. You've got $100,000 in equity, you don't have actually $100,000 cash. You can't use that to buy anything. You have to take out a loan, either a home equity line of credit or a cash out refinance in order to pull out that money to be able to use it. So that there's no way to actually use those funds. And tying up equity, which can be substantial, there's an opportunity cost to that, right? So, what if you can invest that money in the market? What if you can invest it into other real estates or invest it into other opportunities that might come up that allow you to make money? And so there's an opportunity cost when we tie up money in our home. You could miss out on being able to invest in a startup. Or again, build your real estate portfolio. One of my favorite things to help clients do is learn how to acquire investment properties and generate more passive income. It's not 100% passive depending on how you do it, but it is more passive income because you're not actively working a 9 to 5 to maintain that. So it's a great way to develop income. The next thing I want to talk about is good debt and bad debt. And why I want to say that is because I think some consumer debt is bad. You should pay off high interest credit cards. Really the only reason you should use a credit card are for emergency purposes or potentially, if you use a credit card to get miles or points and you pay it off every month. Okay, I'll give you that. But personal loans are typically higher interest rate debt. Auto loans right now are going to be higher interest rate debt. And those are the type of things I think paying off faster is more advantageous for you because, especially with auto loans, and personal loans, they're shorter term loans. So their monthly payments are much larger based on the total amount. And yes, you can come back and say, well, mortgages, if I have a mortgage for 30 years, I'm going to pay $256,000 in interest on my loan. Well, first of all, when was the last time anyone had a mortgage for 30 years? In the current generation, it doesn't happen very often. Number two, the biggest point I'm trying to make right now to you is the fact that can you pay more towards your mortgage and should you pay it off? Sure, eventually. But aggressively paying down your mortgage may not be the right strategy for you based on what your financial goals are. Only thing I'm trying to get across on that. So good debt, bad debt, right? We have good debt. That's going to be, business debt. Let's say you own a business, you want to take out some debt to grow, to expand. Your mortgage or real estate debt, because that's an appreciating asset. That a value of a home is going to continue to rise in most markets in the United States, especially over a period of time, just like the stock market. You take a 7-year snapshot of the stock market, and you take a 7-year snapshot of the real estate market at any given time, you're going to see it continue to go up. For example, let's say you bought a house in 2005 and you kept it through 2008. That house is probably worth double, in some markets, maybe even triple today of what you paid for it in 2005. So it's an appreciating asset, and it's going to continue to go up in value. And so that's the difference between good debt and bad debt. Okay, the second benefit I wanted to talk about is on income taxes. Okay, and again, another disclaimer, I am not a CPA or an accountant, so this isn't tax advice. This is just me presenting some information on some things that I've read. So there is a tax write-off potentially for you, especially if you're in a higher income bracket, that on your mortgage interest. Well, when we take the money that you can save potentially on your taxes, the small amount of interest that you're paying, if we add the benefit of both of those together, a lot of times you can negate most of the interest that you're paying due to the tax benefit and the income taxes that you're going to save. So it's just additional savings. Again, especially if you're in a higher income bracket, that is a great way to write off additional expenses on your taxes. Now, you may not have the ability to write it off. Standard deduction is pretty high. So if you don't have the ability to itemize deductions greater than that standard deduction, then there may be no benefit for you. But that would be a great conversation for an accountant or a CPA, a tax professional that would be able to give you some more advice on if that's something that can benefit you or not. Okay, so the third biggest benefit, and I kind of hit on it a little bit already, that I wanted to talk about in terms of paying off your home is the fact that it's an appreciating asset. So like we were talking about earlier, historically over a given period of time, homes are always going to rise in value. Income always goes up, right? How much money people make always continues to increase, and how much things cost continues to go up. Everything continues to go up, including your home's value. The crazy part of the market that we're in right now is inventory is very restricted. So there's not as many homes for sale as there are people that want to buy homes. So the demand is much larger than the supply. When that happens, we're going to see faster appreciation because you've got more people competing for less homes. And so that's going to drive up the price, which is great for you if you're a homeowner because the value of your property is going to continue to go up and up, allowing you to benefit from that, especially let's say you bought, over the last 6 months, your property is going to appreciate over the next year, year and a half. So once interest rates do fall back down, you have the ability to refinance. You're going to have a lot more equity than you originally started with because the value of that property has increased. So that is a huge benefit. In fact, I was reading a statistic the other day that out of the top 1% in wealth, the majority, and I forget the exact percentage, so I don't want to quote it wrong, but it was somewhere in the 60s and 70% of those top 1% individuals, most of their assets were actually in equity in real estate. So they're not actually tangible, hey, I've got $1 billion cash. No, it's $1 billion in equity in real estate. So it's still an asset. So great benefit to building wealth, great benefit for generational wealth or wealth you can pass on to your family members. And there you have it, the top 3 reasons in why you should not pay off your home. Gotcha. Remember, just the key is about perspective. It's also about having a plan and sound advice. Whenever you're making any financial decisions, you want to make sure you have sound advice. You're getting it from a good source, whether it be something that you read or somebody that you talk to, because not paying off your mortgage challenges conventional wisdom. So it may not be the right thing for you. That paying off your house may be the best option. And I want to make sure you make the best financial decisions for you and your family. So make sure consulting with a professional is at the top of your list, or do be very thorough and make sure you understand the concepts, understand, your monthly cash flow, understand what that looks like. And also, thank you again for watching this video on the top 3 reasons on why you shouldn't pay off your home. Make sure if you like this content, give this video a like, subscribe to my channel. It just allows me to know better what you want to hear about. Go ahead and comment below if there's other things that you might want to learn about. I'd love to share more information in the mortgage, real estate, or investing world with you. I hope you have a good one, and thank you for tuning in.